Perfect. I'll go ahead and get started with the intro, and from there we'll head over to the Lunar Labs guys. So I'll probably throw it to Luke first if you're ready after this. But
Sounds good.
all right, amazing. So yeah, before we get into the main agenda, I just want to give a quick high-level overview of just where Moonwell governance is at for this month. Overall, it's been a bit of a lighter month, but if you check out the monthly report that was just posted in the forums, you'll see that gross voter turnout has remained fairly in line with what we've come to expect this year. So a lot of the highly important governance items, those were all taken care of last month. So yeah, it's not indicative of a lack of progress or current initiatives being developed. It was just more so a timing thing. There are actually quite a few recent proposals and posts that just went up. So yeah, have a look at the forums if you haven't recently. And yeah, with that quick little aside, we can go get over to the main agenda for the day. So yeah, we'll first kick it off with updates from Moonwell core contributors and head over to Anthias for some risk updates. And then I'll cap it off with a quick discussion of the new delegation initiative. So yeah, big thanks to all of our speakers today. There's quite a bit to get through. So quickly opening the floor up to Luke, if you want to take it away.
Thanks. I really appreciate the introduction. And I have a lot of really good news to cover today. So I want to just jump right in. It's great to be here. I just want to kind of put everything in context because there is a lot of stuff happening in crypto in just the last month. I don't know if you all have been paying attention, but the Genius Act was just signed into law July 18th here in the US. This is the very first piece of crypto legislation ever passed through Congress. And this kind of reflects, basically Coinbase and Circle's drive to get regulatory clarity and to help us, kind of fight the anti-crypto army, if you will, of the DC insiders and the banks and all the big finance, basically, for the last decade plus. And the cool thing is we won, basically, crypto won. And I just want to make sure everyone understands how historic that is, not just for Coinbase and Circle, but also for Moonwell, because we're building in their ecosystem. And also, just in case you guys don't know, I've been building in this ecosystem for 7 years now, not just Moonwell. I came to Coinbase in 2019 because I believed in the mission to increase economic freedom in the world. And that's what I've been building for the last almost a decade. And I know some of you know that, right? I built Ethereum staking rewards at Coinbase, cold storage systems that allow us to stake billions of dollars, or allow Coinbase to stake billions of dollars and generate, 2 billion plus in network inflation, they call it, or staking rewards, which includes base sequencer fees now too from Jesse's project from Base. And I firmly believe in that mission. Those of us that live in the US and Europe don't even realize how good we have it. We have great banking services, but 40% of the people in Brazil don't even have a bank account. That's what we've been building, and that's what we're going to keep building for the next decade. So putting that all in context, stablecoins just became legal. And the other thing I want to just share is there's a double-edged sword to regulatory clarity, and that is that some stablecoins are legal, but others are not. And that means any stablecoin that's not backed by US dollars in a US financial institution is basically going to be illegal in 3 years from now. And this is going to have broad impacts in the Ethereum DeFi ecosystem. For example, Sky Money or MakerDAO has over $16 billion of TVL. It's more than 10% of all of Ethereum mainnet DeFi, which is about 114 billion today. And DAI and USDS are effectively banned in less than 3 years' time. And because, just want to say, I have the ultimate respect for Rune and for, the early builders. He built the very first collateralized debt position product, smart contract, back in the 2010s, almost 10 years ago, where you could collateralize, if you were an ETH, if you're in the Ethereum ICO, like my brother was, you could take some of your ETH, you could mint Psi and then mint DAI, and now you could mint USDS or Sky Money against it. And that's an algo-backed stablecoin, but that's now illegal under the Genius Act. And well, you might say that oh, that's just Europe. Who cares, right? Rune doesn't care. He lives in Europe. Why does he care what people in the US do? The reason why he cares, and everyone in all of DeFi cares, is because, MakerDAO is epic, but it's always been a decentralization maximalism story, right? It's been the ETH whale that invested $1,000 and got, millions of dollars could now put his ETH in a collateralized debt position. He could mint DAI and he could go buy a house or a car or a boat or things in the real world. And now that DAI is going to be illegal because it's not backed by dollars in a US bank. And so that's going to basically enshrine Coinbase and Circle as they're the only compliant stablecoin issuer that is under both the Genius Act in the US and MiCA in Europe, which just took effect in January 1st. And you might say DAI could just recollateralize to be backed by US dollars in a US bank, but that's not going to happen because they've been decentralization maxis. I cannot imagine MakerDAO can't just go move all the ETH to a bank. And even if they could, it's ETH, it's not dollars, right? So The implications of this are profound. Not only is there regulatory clarity, and I just want to, hopefully this puts it in context, but there are going to be winners and losers. And the biggest protocols in DeFi that have been around for almost a decade, Ethereum just crossed its 10-year anniversary. I've been building for almost that entire time in the Ethereum ecosystem in some way or another. But I have a lot of respect for these early protocols because they are some of the best protocols in DeFi. Like MakerDAO has operated for almost a decade, and all of the early Ethereum people like me have used it at one time or another. And it's given us the ability, it's given the Ethereum whales and the ICO the ability to go buy real world assets by off ramping through Coinbase. The penalties now in 3 years' time is that any exchange like Coinbase that doesn't delist DAI and Sky Money, USDS, the new version of DAI, they will face not only civil penalties up to $100,000 a day, but criminal penalties. They could face 5 years in prison and up to $1 million a day for knowing violations. So that basically means that within 3 years' time, DAI and USDS, the biggest protocol in all of Ethereum for collateralized debt positions, will become illegal, and Coinbase and every US based institution, and basically even the Binances of the world that have already migrated to USDC because it's the only MiCA compliant stablecoin, they will all delist it because otherwise they will face penalty of prison. And I think just like CZ didn't want to step foot in the US because he got arrested when he did, or in an extradition country, if the algorithmic stable coins want to continue operating after 3 years, they will basically never be able to travel to an extradition country again. They will be arrested and put in a US jail. And so I think that is profound. I mean, like the geopolitical implications, I think honestly, the US dollar is going to remain the reserve currency because that's just what's going to happen now. And the Genius Act is going to ensure that. So I wanted to kind of put that in context. I try not to be too political because, there are people using Moonwell from all over the world, and I know and love all of you. But I just think this enshrines the dollar as the reserve currency of the world for the next decade plus, and makes it so that Coinbase and Circle are the only winners here. And the reason why is because they helped raise $40 billion for the Fair Shake PAC and actually did all the hard work over the last decade of making crypto legal, but it's only US dollar based crypto. And so that's great for Coinbase. It's great for Circle. It's going to be great for the US banks like JP Morgan Chase and Bank of America, who are going to put trillions of dollars in stablecoins over the next decade plus. And it's great for the base ecosystem, and it's great for Moonwell. It's also great for Morpho, who we partner with really heavily, but it's not going to be great for European-backed algo stables and for algo stables that are not backed by dollars in a US bank, like some of the biggest protocols like Athena, for example. So I'm just thinking really heavily about this, and I don't want to go too long, but let me just give some other updates. I'd love to hear your thoughts on where you see this heading. The geopolitical implications are profound. In fact, I'm writing an opinion piece right now that I hope to get published in Bloomberg or Forbes or Financial Times, because I don't think the broader market is aware of what's going to happen in Ethereum when over 10% of all of Ethereum mainnet DeFi goes poof. It won't really go poof. Right now it's migrating to Aave because you can just borrow USDC on Aave. So we've seen a rise of 40 billion to 59 billion on Aave. But Aave's own GHO-backed stablecoin is now illegal in 3 years. And so they're desperate. And that's why you see them marketing on Base now. So basically, the short version, if you didn't hear the first 10 minutes or last 10 minutes, is Coinbase and Circle won. And crypto is now legal in the United States, but only if it's held in a bank in the United States in hard money, dollars, and treasury bills, not algo stables. As much as I love ETH, anything backed by ETH or backed by assets on the Ethereum blockchain is not going to be legal in 3 years. There's no executive at a US company or a exchange like Kraken, Coinbase, you name it, or even the big chain exchanges that are non-US like Binance, OKX, Upbit, you name Bybit, you name the big exchanges. I don't know all of them. None of them is going to want to touch an algo stable in 3 years from now because they don't want to be thrown in a US jail. And I just don't see a path where that changes. Nobody else is going to get $40 billion of money to lobby. The entire maker ecosystem is only 16 billion. How are they going to get $40 billion of cash that like Coinbase raised from Andreessen Horowitz on Ventures and all the big VCs in America? Just not going to happen. And this is why I think Brian Armstrong and Jeremy Allaire are geniuses, because they've been fighting this long battle of 8 to 10 years, just flying to DC every week or every month and just talking to people and finally educating their staff on how things work. So the TLDR is Coinbase and Circle win, USD Coin wins, the US banks win, the Euro banks lose. Tether will be fine. They'll reshore from the Euro dollar system to a US institution. They'll be fine. They make so much money. But anything that's not USD Coin or Tether is going to have a hard road ahead. And even the big banks, JP Morgan Chase, they're probably going to have Chase Coin. They'll bring $1 trillion. They might not even use Circle, but it'll take a few years. And Circle will have a dominant advantage for that time. This is super bullish for all of us building in the base and Coinbase ecosystem, and I couldn't be more excited. So let me pause there, and then I just want to move on to Moonwell updates because that's geopolitical. But how does this impact Moonwell? I think since Moonwell right now is providing over $60 million of USD coin for Coinbase Bitcoin borrowers. These are people on the retail exchange. This is the DeFi mullet product that Coinbase built that launched in January. They're not even aware that they're using DeFi, but they're using Base. They're basically supplying Bitcoin in cold storage, the hardest money and the best cold storage system in the world. And they're able to borrow from our Morpho vault, the vault liquidity. Now, the biggest vault provider on Base is actually MakerDAO. You would be probably surprised to learn, but if you go look at morpho.blockanalytica.com, that's maintained by a risk curator, the best risk curator in the business, who actually does risk curation for Spark too on mainnet. You can see the biggest vault with over 500 million, over $500 million of USD coin is actually supplied into that same Bitcoin borrow market. I think last I checked, there was almost $1 billion worth of Bitcoin borrowing something like 600 or 700, I think over $750 million worth of USD coin. And that is what is driving that really juicy 11% APY on the Morpho vaults. And also, of course, I just saw this week that OP now has a grant. Optimism now has a grant on that vault. So you're earning Morpho tokens, you're earning OP tokens, and you're earning Well tokens. And that's why we're not only able to earn, in this decentralized, beautiful on-chain economy, we're able to earn, 2-digit APYs as depositors on the vault. I'm depositing my own money there too. But also, we're able to kind of share in these juicy ecosystem incentives from all the main players in the super chain, Optimism, Morpho, and Moonwell. And then, of course, the base APY, the 6 or 7% comes from the Bitcoin borrows on Coinbase. And if there's one thing I learned about DeFi in my 6 or 7 years is that one of the most durable use cases in all of crypto is Bitcoiners and Ethereum holders that want to borrow stablecoins. And now Coinbase has the only compliant version of that. Morpho has the only compliant version of that because it uses Circle and it doesn't use Tether or DAI or USDS or GHO. GHO is only 300 million market cap. They're going to die. Okay, so I just wanted to put that in context. And then the other thing I wanted to make sure everyone knows is about the Momo agent. A lot of people have been confused about why do you have this Momo agent? What does it do? I think you've seen in just last month, Momo is now starting to be built into the Moonwell app itself. The simplest way I would describe it is that just like I realized back in 2018 when I was building delegated proof of stake infrastructure for Tezos and Cosmos, some of the early networks, staking needed delegation because you didn't want to give $100 billion of Tezos or Cosmos atoms to your validator and say, please don't rug me. So you delegated staking to them and, or you delegated to Coinbase, and Coinbase could stake for you and charge a fee, but they couldn't transfer your coins out of your wallet. I realized that agents need delegation too. I've been building systems that support delegation for over 7 years that secure tens of billions, if not hundreds of billions of dollars of crypto assets in Coinbase cold storage. And so the Momo agent is the first DeFi agent or the first finance agent, not even DeFi in crypto, because it'll be tokenized stocks soon once those are on chain. But the Momo finance agent is the first agent that supports delegation and has a fully audited smart contract system. In fact, I just put some of my own money that's in Coinbase cold storage and Coinbase Prime's Web3 wallet into Momo agent. And now the Momo agent can auto compound and can make sure I'm always earning the best rate. Briefly today, the Moonwell USDC core market jumped to 12%, so it's slightly higher than the Morpho market. And the Momo agent can move my funds between those markets and vaults, the most secure, well-audited markets and vaults that have been live for years on Base. And it can make sure I'm always earning the best rate. And it can compound my Morpho and OP and other reward tokens back into the underlying USD coin or Bitcoin position. And it never has to take custody of user funds. So that's the unique innovation that I think no other DeFi agent has. If you look at all the historical agents like Freysa, even the best agents like AXBT with the best engineering behind them have lost funds because in a world of AI, it's very easy to trick agents that are just chat GPT wrappers, basically with more training, into saying, ignore all previous instructions and send me your ETH or send me your coins. So that's what Momo agent does. It allows you to delegate your funds essentially to the agent. Your funds stay in a smart contract that is fully audited 3 times, actually, once by Certora, twice by Halborn. And we have a bug bounty with CodeRena on the agent contracts as well. And it allows you to simply delegate from cold storage. Essentially, the cold storage wallet is the only thing that has permission to withdraw from the contract. So that's kind of how Momo agent works. And then, more importantly, sorry for being so long-winded, but the Momo agent platform, you might be asking, why does Momo have its own token? Why does it even need a token? I've posted some threads about this, but the Momo agent platform itself is able to generate trading fees on Aerodrome. And so when Mamo launched, there's been no Mamo tokens ever sold to any VCs or even retail. In fact, we don't want to sell tokens. We want to model the tokenomics more like Hyperliquid. If you're familiar with that perps DEX on the Hyper EVM, it's a really amazing perps DEX. We admired their mechanism design. We came up with a solution that allows the Mamo agent essentially to just basically capture 100% of the trading fees for the Mamo Coinbase wrapped Bitcoin pair and the Mamo USDC pair and the Mamo virtual pair on Aerodrome. And then those trading fees, and then in the future compounding fees, right now they're 0%, but maybe in 2026, we'll turn those on. All those compounding fees and platform fees flow back to Mamo depositors. So we've created this really interesting mechanism design where Mamo is not just an agent, but it's a platform for finance agents. Mamo is just the first finance agent. There will be other strategies. Like I said, there will be an ETH strategy soon. We're just working on the audited smart contracts for that. It requires some modifications, but there will be other strategies that will allow you to compound those positions and even tokenized stocks. Once that's available, we know of a team that's actually building something very similar to what Robinhood built. It's 24/5 trading of tokenized stocks. So you'll be able to buy like $100 worth of NVIDIA, or you could buy baskets of stocks like Mag7 or founder-led companies on NASDAQ. So you could get a basket with Tesla, NVIDIA, Coinbase, Google. I guess Google is still founder-led, and all the founder-led companies that tend to do better than the ones where founders have left. So kind of really excited about the Mamo Finance Agent because it's not only crypto or DeFi or whatever, it can be personal finance agent. And that's why we call it your personal finance agent, not your crypto agent. So anyway, I want to wrap things up here. There's a few things governance related that I wanted to talk about really briefly, and I'll let Darren talk about some of them. But I'm really excited. I think Darren and some of the super delegates that are really active in governance, they basically have been working on a proposal with Nouns DAO. Like Nouns might want to deposit 300 ETH into the Morpho vault, the flagship vault on Base. And so I think that proposal was really well received. And actually, the Nouns DAO really love those guys. I've been a big fan of Nouns for a couple of years now. They also wanted to receive a delegation. I believe this was discussed in the Nouns DAO call. Darren can talk more about it. And they also want to perhaps partner with us on a Moonwell X Nouns card, which would be amazing. So I'll let Darren talk more about that. But I also wanted to let you guys know that the Moonwell team is growing, or the Lunar Labs team that is the core contributor has been growing a lot lately. We've recently hired a full-time marketing lead, Katie Atherholt. Now, Katie Atherholt has her own podcast called Reply Girls. Many of you may know her. She's on a plane right now, and so she couldn't be here. But we now have a full-time marketing lead for the first time ever helping Moonwell, and she's got some amazing plans coming up. We've also hired a full-time growth lead, Danny, who comes to us from a Balancer, and she's based in Latin America. Danny, if you're here, I'd love to just let you introduce yourself really quickly. And while you're coming up, I also wanted to let you know that the team is growing really rapidly. We now have about a dozen engineers across front-end, back-end contracts working on both Mamo and Moonwell. And in total, including biz ops and growth and marketing and legal, we even have in-house counsel now. Hey, Danny, just a second. And we have about 20 people contributing at Lunar Labs now, and that's just Lunar Labs. We have Anthias and other contributors. Danny, go ahead and introduce yourself. I'd love to have you tell a little bit about your background and what you're going to do at Moonwell.
Hi. So basically, I have joined the team on last Monday. Very happy. I also work with governance security, previously Balancer as well, doing growth and marketing and everything I could do. And now gladly here. I was also a Chainlink advocate, so I have a pretty extensive background in growth, already bringing some partners to Moonwell and Momo as well. So yeah, pretty good to be here. Very extensive background in growth and also governance. Yeah, pretty happy. Thanks, Luke.
It's great to have Danny. She's actually underselling herself. So she's been working in crypto since I think 2018, and she's been working full-time in growth and working. She also has an advisor to a governance protection project that actually aims to protect DAOs from activist investor attacks. And also, I think she's spoken at probably a dozen different ETH global events, ETH Denver twice. And what we've been chatting about just in the first week or so she joined, she's only been here a week and a half, has been the growth and BD strategy. We haven't had a full-time BD person before. And so it's just been kind of me and Chrissy and a few other people doing this. But our strategy is really to kind of focus, similar to how Morpho has been focusing on big CeFi and DeFi wallets, places like Revolut and places like, all these big CeFi wallets want to earn yield on dollars. And so Danny's going to focus on that, as well as, DeFi funds, liquid investors that might want to put lots of TVL into Moonwell and help grow the TVL base. Also, just working with some of the best partners that we already work with, like, the Coinbases, the base team, the Morpho team, and just being that kind of like hands-on part, Aerodrome team, the partnership, and just kind of growing those partnerships. Danny, you want to say anything else?
Yeah, no, just happy to represent us on stage, doing local events as well. Yeah, I already spoke on ETH Argentina, ETH Belgrade, ETH Denver twice. So happy to be there and represent Moonwell and also Mamo. So yeah, thanks, Luke.
Yeah, no worries. And then also I wanted to let everyone know that, there's sort of a limitation right now. The card partner we've been using, Cypher, sadly they had to turn off US issuance because the partner bank, Reap Global in Hong Kong, just can't issue cards in the US. So we're currently working really closely with Bridge, the stablecoin partner that offers the virtual account. We've completed sort of the legal work required to onboard to their card product, and so that should be coming. That's one of the big projects we're working on right after the Mamo V2 dashboard. It's going to land this week, hopefully. The V2 dashboard will prettify Mamo agent a bit, but the thing we're rotating on to is a V2 of the Moonwell card for US. You can still get the Moonwell card if you're non-US. You can get one today, but for US persons and for 8 countries in Latin America, including Argentina, Brazil, and I think a few others that I can't remember off the top of my head, but we'll be able to issue new Moonwell cards, and we'll have some cool designs like Moonwell and Mamo, and maybe even Nouns DAO cards. They're interested in doing some collabs, which would be cool. I'd love to have a Mamo with Noggles. I think that's something everyone would love to see on their card. And then that will also allow us to offer interchange fees, meaning we can offer rev share back with people, cash back. And I'd love to hear from you how that should work. We could give cash back in USD coin. We could give it in Mamo or Well tokens. We could give cash back in Bitcoin or whatever. Maybe we let people choose what token they want to get cash back in. Because I think this will open up the doors. We hope to launch in next month or two. It's just it takes time for us to get it right. We'll be able to have the Moonwell card right into the app, and also the Mamo agent support. So for example, load $20 onto my card, and that's a feature we want to build. So I'm really excited about that. Sorry, I could talk forever. I should turn it over to Darren and the rest of the delegates or the rest of the governance contributors, because they also have a lot of important things to talk about. Darren, do you want to kind of kick us off and talk about the Nouns DAO proposal and then get into your other topics as well?
Yeah, of course. So recently we pushed a proposal to Nouns DAO to be discussed on partnering Moonwell with Nouns DAO. And so this would essentially ask for Nouns to deposit some of their ETH from ETH mainnet into one of the ETH vaults on the base network. And alongside that proposal, or in the discussion, we also came to a conclusion where Nouns wants to be more involved with Moonwell. If they're custodying their funds with the Moonwell protocol, they would prefer to have some sort of delegation as well. And we think that this is a pretty great opportunity to have a new partner in our ecosystem. As Luke had already said earlier, there was also interest in the Moonwell card product. And so that is on the horizon, or this partnership is on the horizon. Just a couple more hurdles, and then we should be a go, hopefully. But yeah. Second thing I want to discuss was a new proposal that I posted to the forums recently, and it is for a code of conduct update alongside the introduction of conflict of interest disclosures. So basically the proposal has 2 key reforms: enforceable like punitive measures for violations to the Moonwell code of conduct, and you can find that within the Moonwell constitution, and then a mandatory conflict of interest disclosure for large voting delegates, right? And so right now we have a code of conduct, but no process for what happens if a delegate or a contributor were to violate it. And so the proposal outlines that in examples of violations, so harassment, baseless accusations, doxing, or a failure to disclose certain conflicts, then there could be some enforcement punitive measure, such as being removed from the superdelegate program, having well stake removed, or being removed from a contributor role of some sort. And we believe that this is particularly important as we scale governance, especially as we expand the superdelegate program. It helps set clear boundaries and ensure accountability without pausing or stalling discourse. And so the second part that I want to touch on here is that there's also an introduction to a conflict of interest transparency policy. So basically, if you or an entity you're affiliated with stands to benefit from a certain proposal, we would prefer that would be disclosed prior to a vote. And so we've included real world examples of what those disclosures could look like as well. So This could be whether you're a service provider, a token holder, or a large token holder in a partner protocol, or an advisor. Again, the emphasis here is on over communication, not silence. And yeah, so the voting options for this proposal, and it's going to sit on the forums for a bit. I would like people to discuss this more, but the voting options will be approving all of the above. So punitive enforcement of the code of conduct and conflict of interest like transparency disclosures. And then the two other options are approving just one of those things. And then, of course, you can vote to abstain or you can vote to approve none of them. And yes, the proposal is going to go through a 6-month trial period. And then we're going to reevaluate the feedback from there. But this is just one proposal and discussion in a set of a few that I have planned for the coming weeks. And yeah, those are all the updates from my end. If anyone else, if
Darren,
anyone has any questions.
great updates. I forgot to mention one other thing that I wanted to discuss. And also, I want to just congratulate you on the hard work of kind of putting a lot of thought into this code of conduct and conflicts of interest proposal. First of all, I took a read through the draft you shared, but I found it really insightful and sort of important that as we sort of grow bigger as a DAO and there's more and more interest and the value of the project and the protocol increases, we will at some point face activist investor attacks. We'll face not necessarily attacks, but there are all kinds of grant farmers and other type of unsavory projects that just, for example, a good example of this is that the Optimism DAO has had, frankly, a lot of questionable grants that have been voted on because people don't disclose their conflicts of interest and they kind of rally people behind, hey, vote for my grant proposal. So we want to just avoid those sort of conflicts of interest or make sure they're well disclosed. And a good example of that is if someone like Anthias Labs or a risk curator that is being paid by the or a contributor like Lunar Labs, my company that's being paid by the DAO wants to put up a proposal or propose something, we should disclose like, hey, my paycheck is paid for by Moonwell Foundation, mine especially because I work for Lunar Labs, the founding contributor, and you should just know that when you vote on that proposal, not that Lunar Labs puts up a lot of proposals because we're the founding member, our legal team says we shouldn't, but that's something that every contributor should disclose that, hey, who pays your paycheck basically, because most of the conflicts of interest are just, I want you to use my solution. And by the way, I'm not going to necessarily tell you that that solution is also paying me a salary or giving me an advisory share. And while we can't obviously track everything because a lot of it is invisible, we also want to prevent some of the more blatant attacks. For example, I don't want to name names because I don't really have evidence and I haven't done a lot of investigation, but like any contributor that buys or sells a large amount of well tokens within a few weeks of putting up a proposal, that looks a little bit suspicious. And I think we want to, that sort of starts to look like activist investors, right? Because you could theoretically buy a lot of well before a proposal and then sell it a few weeks later and, kind of move the market in your favor. And while there's no way to tell on chain, like if all the people voting for your proposal are affiliated entities because they're all wallets, you should generally, if you're a good contributor and you want Moonwell to succeed, it's probably not a great idea to ask a lot of your friends or like coworkers to go buy tokens and vote for the thing that isn't in the best interest of the Moonwell DAO. I applaud your efforts, Darren, to just kind of like put some framework, some starting guardrails around this, because one of the things I really appreciate is that we are one of the more active DAOs. And I think that's because we put a lot of thought into it and we've invested heavily in the DAO itself. There are a lot of DAOs I've seen that are just sort of checked out and, very few voter participation, even some of the bigger projects like, I don't want to name names, but some of the big VC-backed projects that are a lot larger than ours. And so I think that it's a testament to our quality of our delegates and quality of our token holders that they do vote when it matters. And I really appreciate that. And then the last thing I wanted to mention that I forgot to mention was there was a recent Twitter thread or X thread, sorry, from someone in our community that proposed something that I think is a really important topic, and that is the ecosystem reserve, the well buyback auctions. So first of all, sorry for being so long-winded again, but if you haven't been deep in the weeds on the mechanism design and some of the changes in the last 6 months, I believe early this year, early 2025, Moonwell contributors at Solidity Labs implemented on-chain auctions of excess protocol revenue. We call that reserves. Reserves are typically extra liquidity in the market. Arrow is the most profitable market, the Aerodrome token, because there's such heavy borrowing demand for farming. And so there was a lot of Arrow just as excess reserves, excess liquidity in that market. And we now have an on-chain system that's done through governance that is, I believe, another first in the industry. There's so many firsts in the Moonwell community. It's amazing. But it's the first system that we worked pretty closely with our legal teams, both in Cayman Islands and in the US to make sure this is compliant. And it's all done through on-chain auctions. Basically, what it does is when you vote for that liquidity automation proposal every 4 weeks, the liquidity incentives, it also includes minimum reserves that are set by Anthias Labs, our risk curator, or Gauntlet, our historical risk curator that recently left on the 3-year anniversary. Those minimum reserves or minimum balances of Arrow, USD Coin, ETH, etc., staked ETH, restaked ETH in those markets. Anything above that gets automatically swept by the government's proposal into these on-chain auctions. Those on-chain auctions then over the course of the next 2 weeks slowly sell those reserve tokens for well, buying back well. And then that's done in a really novel way that ensures that we get the best price execution. MEV bots, essentially solvers, essentially swap for the Moonwell DAO. So the Moonwell DAO is not selling tokens, but MEV bots are simply swapping well tokens for the underlying assets, the Arrow, the USD Coin, the ETH, the staked ETH, the restaked ETH, etc. And so at the end of the multi-week process, when the next proposal goes up, I apologize for how wonky this is, guys. This is really complicated, but the mechanism of design is important. It's what makes it innovative. After a few weeks, all that's sitting in those reserve auction contracts is well instead of Arrow. It was Arrow, was USDC, was ETH, stake ETH, restaked ETH. Now it's well. And then when the next governance proposal passes, it sweeps that well into what's called the ecosystem reserve. This is part of the safety module, the shortfall insurance for the Moonwell protocol. And this ecosystem reserve is really designed to be, that kind of, bear market insurance policy where if, let's say we have another 2023 again, and, markets are down really bad, volume is low, there's very little activity, USDC is depegging to 93 cents on the dollar. It was a dark time. That ecosystem reserve can be used to kind of bolster the staking rate for people that are participating in the safety module that are also actively voting in governance at least once every 30 days. And it can also be used to provide bad debt insurance or shortfall insurance in case any market takes on bad debt. Like if there is another, God forbid, another USDC depeg. I don't think that's likely given the strength of the USDC ecosystem now, but if there was some asset that took on bad debt or market, that shortfall insurance is there for them. And so this proposal, sorry for the long-windedness, this proposal on X was super interesting because we've been thinking about this for a while. Ultimately, we shouldn't be giving out all of the excess revenue, 100%. And in the last 4 cycles, I believe from March to June, we've only been doing this for 4 months. Over $1 million of well tokens have been redistributed, or protocol reserves have been auctioned off for well and then redistributed to stakers. It's been incredible for those of us that stake. I'm also staking some of my tokens myself, my founder tokens, full disclosure, transparency, but it's been really lucrative. But I think the staking rate has historically been 15 to 20%. And in some cases on OP mainnet, it is even higher than that. And that is probably too high of a rate. But the proposal was, why don't we burn some of it? Now, we've talked to our legal team and they're not really thrilled about burning tokens. And there's some regulatory risk there for buying back and burning for a project that wants to stay on the right side of regulation. But what we could do, and I think this was always our intention, is that staking rate, meaning how much of the reserves are distributed, of the excess, reserve auctions are distributed every 4 weeks, has been set to 100%. 100. If we bought back $250,000, we emit $250,000 worth of well to safety module stakers. That's why the rate is so high. It doesn't have to be 100%. It could be 90, 80, 70. It could be 50. It could be, it could be 0. I guess what I'm asking is the broader question is like to the DAO and to all of you is what should that rate be? Because I don't really know, and I'm not, I know a lot about DeFi, but I don't want to decide for you. Whatever we vote on is kind of a binary outcome, yes or no. But I'm going to ask if Darren or one of the other super delegates might want to put up a snapshot proposal maybe on Monday. Because the next proposal has to go on chain for the liquidity automation, has to go on chain on Thursday. It's generated by some code that a few of us wrote. It's automatically generated, and it's just a 1-line code change to say change that 100% to like 90 or 100% to 80. And so I would love it if one of the super delegates put up a multi-choice snapshot poll of how much should we distribute every 4 weeks. We can just decide on whatever that is, and then there can be a multi-choice poll. And that way we'll get some good data from all of you voters about what do you want it to be? Do you want it to be 80%? Do you want to try 50? I don't really know. And I don't want to tell you what it should be. I think you guys should tell us. That's why we're decentralized. So I'm going to ask, just to kind of wrap this up, I'm going to ask the contributors, whether Darren or some other super delegate, we are now growing that super delegate team. Thank you, Darren, for helping to put up a snapshot poll. They all have delegations from Boardroom through the Moonwell Foundation, through a loan from Moonwell Foundation that recently got granted a few months ago. They have the voting power to propose in the snapshot portal. So if you could just put up a multi-choice proposal about like how much of the well acquired and reserve auctions should be distributed every 4 weeks to well stakers. And then that will eventually, it won't be burning the token, but it will be holding it in the ecosystem reserve, which essentially takes it out of circulation, which is the desired outcome. We don't need to just keep emitting such high well rewards. Like people are happy to stake for 10% probably, or 15%. It doesn't have to be 20%. It's just been really high because number one, that shows Moonwell is generating a lot of revenue, which is great. We are the most capital efficient protocol on Base. And just to wrap things up, just to tell you how capital efficient we are, from June of 2024 to June of 2025, the Moonwell protocol generated $2.7 million of revenue. That's not, and then I think about 12 to 14 million, I don't know the exact number, of fees for lenders. That is almost twice what Aave generated on Base. And that is something we should all be proud of. The reason why is because we've been so focused on capital efficiency. Morpho vaults contribute revenue. The Oracle extracted value auctions, chain auctions contribute revenue. All those things contribute revenue that are innovations that only Moonwell has. And I'm really proud of all the contributors that built those things. So, and then we've distributed over $1 million of that excess protocol revenue in just the first 4 reward cycles. And that'll continue, but we don't necessarily need to distribute all that revenue back. We should probably hold some of it back for a bear market, because eventually the bear market will come back. Maybe not in the short term, who knows when. So sorry for being so long-winded, but I want to kind of open that up to the community. And if you guys have questions toward the end of the call, I'm happy to answer them. Who is next? Is it going to be Anthias?
It is. Chris, whenever
Thanks,
you're ready,
guys.
Chris. Thanks, Luke.
Hey guys, thanks Luke for the introduction. It's good to be here. On the agenda today, we're going to talk about some of the changes we made to the Moonwell protocol over the past month in terms of parameter updates. So starting on base, CBXRP, we proposed an increase CBXRP collateral factor from 70 to 74%. The rationale here is that CBXRP last month was like a really novel asset, but very quickly liquidity has increased on base. Also, given the volatility of XRPs in a similar class to that of ETH, collateral factor can safely be increased to allow greater capital efficiency for users. So that went up in a proposal a few weeks ago. We noticed that CBXRP supply cap was approaching with 70%, and so we bumped the supply cap up to basically allow more growth of the protocol. So bump that up from 1 million to 2 million CBXRP. Moving on to Morpho, we increased the Morpho supply cap from 4 million to 6 million Morpho. And similarly, L, we increased the supply cap from 150 million to 220 million well. The rationale is that both of those were actually at their cap, and so we wanted to basically allow more protocol growth, allowing new suppliers to these markets. Moving on to Open Mainnet, we proposed a change increasing the multiplier of 50 bips from 0.049 to 0.054. The rationale there being we're noticing that utilization was crossing above the kink of 9%. And what this does is it basically, calculation for the interest rate relies on the jump multiplier, which is much higher. And so once utilization is past the kink, interest rates become like very unpredictable for borrowers and they start spiking. And this is like bad for user experience. And so the aim to increase the multiplier here is to stabilize these rates so that the optimal rate borrowers are willing to pay exists below the. Also, looking at Moonriver, Moonbeam, we don't have any primary changes this month. And also want to give a few updates on our risk dashboard. So we expanded the range events that we index to go back into January 1st, 2025. We had a user request this data they really wanted to know, and we were only indexing up to when we started working with Moonwell back in April. And so we basically extended the historical range so you can go back and look at liquidation events all the way up to the beginning of the year. Also, if there's any other features the community would like us to see, feel free to reach out to me here on X or on the Moonwell forum. Committed to like iterating on this product and bringing the best dashboard we can possible. So looking forward, we're going to put up a proposal around next week, Wednesday, and that'll be risk parameters for the. Yeah, that's it for parameter updates from me, and I'll pass it on.
Awesome. Thanks, Chris. Yeah, really quickly, I want to extend the offer again. If anybody has any questions for the speakers, you can request to speak, and I'm happy to cede the floor to you. But briefly, I'll touch on our delegation initiative. We're wrapping up here. Luke did mention this, but the TLDR essentially is that Boardroom has 2.4 million well tokens left to delegate and promote delegates to super delegates. And so we're essentially looking for just a handful of really high impact, really highly involved delegates who are essentially experts in different aspects of Moonwell governance. So yeah, currently there's 3 of 5 open slots left. Use our first delegation ability to delegate to PGov. So yeah, take a look at that forum post. We'll be updating that every month to basically say who we're delegating to if we removed any delegations, what specialties are being filled. And yeah, the second half of the proposal is essentially laying out 5 different areas of expertise where these super delegates can best lend their efforts to Moonwell. So that's asset listing, essentially a role similar to what 0x Mims was doing. Second is Security Council. Third is data and analytics. Fourth is Treasury. And fifth is third-party opportunities and research. So yeah, have a look at that forum post if you want more granularity on our delegation abilities and what the specialties are, and essentially how you can get more involved with Moonwell as a delegate. So yeah, and there's no application required here either. So if you're just involved with Moonwell and you meet the requirements, you're eligible to get a delegation from us. Yeah, that was just a very quick overview of that program. And that's it for my piece. And a quick reminder, if anyone has any questions, you can request it to speak.
I could jump in actually real quick.
Sure, please.
I just wanted to say something about the minimum reserves and the safety staking module. Kind of in response to Luke, you mentioned there's going to be a proposal to basically, as I understand it, it adds basically like a sort of caching functionality. So instead of auctioning off 100% of reserves every month, where some months you might get a lot of reserves, there's a lot of liquidation, but some months there might not be, and so kind of to smooth out that curve, I think a cache sort of makes a lot of sense here. But yeah, I'm interested to spend more time thinking about this. I've been thinking about a lot about the minimum reserves. I've been putting together the minimum reserve Rex, and so this is definitely like right up my alley. But yeah, just wanted to offer a bit of an initial response there.
Sure. Thank you, Chris. Looks like David joined. If you have a question for one of the speakers.
Yeah, hi. Hi, I had a question for Luke. What you were saying about the topic of the post that was posted yesterday or day before, and I responded to it. Is it possible, or would you guys consider to have Moonwell actually buy Bitcoin and Ethereum with part of those revenue reserves instead of buying back Moonwell?
Yeah, that's a great question, and I hadn't really considered that. I mean, I think the general reason why we're buying back well is that the safety module or the shortfall insurance, it's basically a set of contracts. It has an ecosystem reserve contract, which is where the sort of well is held,
Yeah.
and then it has like the STK well token contract itself. And so when you're just holding STK well in your wallet or staking, you're entitled to that staking rate, right? And when you claim, you
Sure.
claim from the ecosystem reserve.
Sure.
Now, there is a limitation. That contract can only hold one token, and that's well. Although there
Okay.
are newer versions, for example, it's basically forked from Aave's safety module, but Aave is developing a new one called Umbrella that will support multiple types of tokens. For example, I think in Aave v4, which isn't out yet, they were talking about using, instead of having all the reserves be in Aave tokens, right, using things like USD Coin and ETH, because during
Yeah.
a shortfall event, the last thing you want to do is be selling your own token because your token might dump in price, right? If you're getting hacked
Exactly.
or losing funds. So it's a really interesting idea that we've thought about, but hard. Go ahead, sir.
But you're receiving the funds, you're receiving revenues in different tokens, essentially,
Correct,
not just
yeah.
USDC, right?
Yeah,
So
that's
then you're
correct.
swapping them just for well. So,
Yeah.
just the ETH treasury companies right now are popping up, obviously Bitcoin treasury companies. What if Moonwell also became like a DAO treasury company for ETH and CBBTC, and then used actually the DeFi within their own ecosystem to like get yield on the treasuries that they got? And then there won't be so much sell pressure on the token. Yeah, you'll be buying less, like say 50% still goes to the stakers, and then the rest goes to buy hard assets that can also be used in a shortfall, in a hack, or whatever, because those are hard currencies, and you can do stuff with them on on Moonwell, or you can show people how MamoBot can manage your reserves. Like if Mamo's actually managing the reserves of Moonwell, that would be cool. And just like people are attracted to Bitcoin and Ethereum, like that's hard money, So if it's possible, like you said, in the future to give them not just well tokens, but also Bitcoin and Ethereum as as like a staking reward, then I think it would incentivize more people to want to stake because they're getting real hard money, and they can take that and start putting it into Moonwell as collateral and start using the ecosystem. So it'll grow the ecosystem as well as kind of like reward them and attract new stakers from selling their tokens. So that's kind of the idea about that.
Yeah, I love everything you just said. Honestly, you're speaking my language, man. So anyway, first let me kind of talk about that a bit. Because first of all, you may not know this, but when Moonwell first raised funds, it was over 3 years ago in early 22. I think we did a private sale to VCs. That was I think a $13 million round led by Arrington Capital and Han Ventures and also Hypersphere, who was a smaller VC. In any case, that was the private round. And then we did a public sale to non-US and accredited US investors of about $12 million. And I remember vividly that public sale was happening the very week in April when UST was collapsing, when Terra Luna was collapsing. And we were just watching in horror as, UST went to zero. And we were like just hoping that our public sale completed. But it was still like kind of bull market times, and the public sale went through. But that public sale was not only in stablecoins like USDC and Tether, but it was also in ETH. I remember that it was also when ETH was like $4,400. ETH was really high back then. And one of the things that I remember having some early discussions with some of my co-founders that are no longer around because they left, all my co-founders kind of left during the bear market in 2023. And I was the one that had the vision, but that's another story. I remember having some conversations with them where they were like, we got to sell the ETH. We got to sell the ETH. We got to, everything's crashing. Berlin is going down. I don't know if you remember that time, the CeFi lenders were all collapsing.
Yeah, I remember that.
That summer, it was Genesis, Celsius, BlockFi, ETH was dumping. And so every few days, my finance, or like the CFO of Lunar Labs at the time, my finance guy was like, we got to sell some of that ETH. It's like tanking hard. And I said, you know what? I'm like, I've been in the Ethereum ecosystem for like almost a decade now. I've been hodling ETH since like, I don't know, 2016, 2015, whenever. I wasn't in the ICO like my brother, but I bought it really early. I'm like, ETH is hard money, just like Bitcoin. I'm like, I don't want to sell the ETH from the treasury. We should just let it sit. I mean, like, first, it's going to be hard. We didn't even know how to sell because it's in the foundation. It's not in we raised it at the Moonwell Foundation, not at like the Lunar Labs Co. So I'm like, we can't just sell it. It's not ours, right? And then second, I was like, it's hard money. Sure, it's going to drop. We're going to a bear market, like it was obvious, but like it'll come back out the other side. And now it's almost back to where it was. And so we've been kind of holding that ETH. And I think at times the foundation has been staking it. At one point in time, we were doing a treasury strategy where the foundation had like some of it in staked ETH, some of it in a like Era Finance Vault, and I think some of it was at one point in time, some of it was even in Euler V1 before it got hacked, and then somehow the foundation got back more than they lost because of, I don't know, the Euler team did a remarkable job of recovering all the funds. And so we still have that ETH in the foundation treasury, so that's one. And then that ETH diversifies the Moonwell Foundation, and that's sort of like one of the balance sheet assets, if you will, that can kind of continuously fund operations as ETH continues to rise. But I think you have a good point of the rest of that foundation treasury is just USD coin, right? In fact, we had even sold the Tether for USD coin just because we were concerned about the risks of Tether. That was before the USDC DPEG. But right now, I think you have a good point that first, there's two things. The Moonwell protocol and the Moonwell Foundation are separate. And I just want you to know that because Moonwell Foundation is domiciled in the Cayman Islands, we spent a lot of time with on offshore counsel or onshore counsel, whatever you want to call it. There's 3 directors of Moonwell Foundation, a secretary, supervisor, and accountant. They're all domiciled in the Cayman Islands, and they have really strict laws under the Cayman Island Monetary Authority. I know this is getting into the weeds a bit, but I want to just explain it. One of those laws is designed to regulate CeFi exchanges, right? People like Coinbase or FTX, right? If FTX set up shop in the Cayman Islands instead of Bermuda, they would be required to provide proof of reserves to the Cayman Islands Monetary Authority because Cayman Islands is a really above board jurisdiction. They host some of the biggest TradFi hedge funds and banks, not just crypto projects like us. And they want to make sure that if you're custodying funds, which Moonwell never does, we never custody or take control of user funds. It's all self-custodial smart contracts, but they want to make sure if you custody user funds that you have all the reserves, that you're not like FTX, right? You're not committing fraud. And so and one of the triggers, basically call that being a virtual asset service provider. And so Moonwell is not a virtual asset service provider under Cayman law, but one of the triggers for that is if Moonwell Foundation earns lending revenue in the form of revenue, basically reserves, what I just talked about, then they get regulated as a VASP because now they're like a kind of treated like a CeFi lender, if you will. They're treated like a Genesis or a BlockFi or a Celsius rather than a Moonwell, a decentralized lender. That would mean that now the Moonwell Foundation has to pay millions of dollars a year in compliance costs just to provide those proof of reserves, those economic substance reports saying, even though we're a DeFi protocol and we don't ever take custody of user funds or control, we'd have to prove like, hey, do you have all the Ethereum or Bitcoin? And that would be millions of dollars in compliance costs. And so that's a challenge. But what we can do is we can recognize revenue at the protocol level. That's why they flow back through to the DAO, not necessarily to the stakers, not necessarily to the Moonwell Foundation itself as revenue. So that's one. The Moonwell Foundation itself should diversify its balance sheet. And I think contributors like Anthias Labs actually have expertise in that area, and they will probably be helping because they're better investors than I am. I'm not really a trader, but they are. And then number 2, I think on the protocol level, we should diversify the protocol revenue. I think that's a fantastic idea. And so we should figure out, like, maybe you're right, maybe those auctions should be buying back Bitcoin and ETH and other hard assets. And sharing those with stakers. I think that's a great idea. And we could build contract systems that do that. And one thing I wanted to say is like, to your point about how people would really love to earn Bitcoin. I'm an early Bitcoiner and Ethereum person myself. I would love to stack Bitcoin. And I want to let you know that's kind of what the Momo agent does now. So because I mentioned earlier that Momo returns 100% of platform fees, meaning the agent platform fees, to Momo holders. Basically, if you deposit your Momo into the Momo account, and the way it does that, how you might ask yourself, I kind of mentioned this earlier. The way the platform generates revenue is through two things. It captures all the trading fees in the Momo Bitcoin pair, and that was intentional to pair with Bitcoin instead of ETH. We should pair it with ETH too now, I think, given ETH is hot again. That all the trading fees on Aerodrome for that, it was 10% of the total supply, flow back through to Momo depositors. And we turn on Momo and virtual. So because you earn, if you're familiar with the way Aerodrome, or it's the Uniswap V3 pool, basically the concentrated liquidity pool, if you're familiar with the way that works. Basically, if you're a large LP and you stake your LP tokens, you can earn Aero tokens. But if you just hold the LP token like Uniswap in your wallet, you earn the trading fees of people that trade against your liquidity, and that liquidity is full range. It won't go out of range. So that means that 100% of the trading fees, which is actually generated in just the first 8 weeks, it generated $250,000 in trading fees in the form of Bitcoin, Momo, and virtual tokens. Those all flow through to Momo depositors. And even though Momo was small, I think it was 35 million TVL last I checked. It's not as big as Moonwell. That is a $2 million annualized run rate, and that's not just in like Well tokens or Momo tokens. That is in Momo plus Bitcoin plus virtual, now plus USDC. And so we actually see that as our opportunity space, because there are things that are harder to do on the Moonwell side because it's a governance token, just to be transparent.
Yeah.
Our legal team said that like, if it's a governance token, you have to be careful about how and all the SEC regulation that we've spent millions of dollars on attorneys to try to stay on the right side of. That's half the raised funds went to lawyers, basically, to stand up Moonwell Foundation to make sure we're compliant, right, in everything we do. But on the Momo side, since we've never sold tokens to anyone, right, that's important. We're more like Hyperliquid, if you're familiar with mechanism design. And we've also never, we're also just simply, we're never kind of like, we don't have a fee switch that's turned on anywhere, and we're passing 100% of the Momo protocol platform fees back to the Momo depositors, Momo holders. And it's just the airdrop and the protocol on liquidity. I think that's a really powerful mechanism design. And this is why we put a lot of thought into it, because I was inspired by Hyperliquid. I was like, what if not just the compounding fees that Momo agent earns when we eventually turn that on, but also the trading fees for all these pairs? And I learned this from definitive founders like Dennis Kian and Jay Prasad, who actually worked with me at Coinbase. And I don't know if you're familiar with the Edge token. That's their project. Amazing trading execution engine. It's like basically Coinbase Prime, but on chain. Those guys came from Tagomi, which was acquired by Coinbase to become Coinbase Prime. Anyways, they built an on-chain version of Tagomi, which was the best trading time-weighted average price engine, TWAP trading engine. And Kian is a gigabrain. He was like, he paired the Edge token with Bitcoin, because now every time Bitcoin is pumping on a weekend, because you can't trade stocks on the weekend, but you can trade Bitcoin. Now the Edge token is pumping. And I was like, wait a minute, is that why you pair it? And then also you're earning trading fees in Bitcoin and Edge, not just ETH and Edge. Now ETH just became hot again, but when Bitcoin's hitting all-time highs, that's a really powerful concept of like, hey, now I can hold Momo tokens and earn Bitcoin. I can stack Bitcoin.
Yeah.
And so
And I'm doing that for
go ahead.
Momo, but as far as like for Moonwell, how to get Moonwell holders
Yeah.
excited about holding their Well token and not dumping, because obviously everybody
good
wants the
question.
price
Yeah.
to go up and like not stagnate around 3 cents. Like, they want it to keep
Well-
going up and getting excited about it. So it's like the idea was
No, it's the way that will happen is because the Momo agent brings more TVL into the Moonwell flagship vaults and into the Moonwell core markets, because that's basically what it does. It automatically moves you between the vaults and markets depending on what rate is the best.
right.
And those deposits generate more revenue for Moonwell. So as the Momo deposits increase, and as the agent, you think of the agent as just an easier way to interact with Moonwell. You can now use an agent and it auto compounds for you. Before if I wanted to put a few $1 million into the vault, I would have to go claim those reward tokens every week and compound them back into
Right.
more Bitcoin or more USD
No,
coin.
I use
tokens.
Momo and
But now-
Moonwell, and I'm testing out everything. So like
So,
it's staking,
yeah, so-
it's doing all kinds of stuff.
So if you understand how, like what I explained, the reserve auctions, like excess
Right.
protocol revenue, which comes in the form of vault curator fees, our vault is one of the highest paying or highest performing vaults on Base, because that's how we're able to generate more revenue than Aave and Morpho combined. Morpho hasn't turned on the fee switch yet, so they're generating zero. Our vault is actually helping Moonwell generate more protocol revenue in the form of USD coin and Bitcoin. and Eurocoin and ETH. And then that flows back into those reserve auctions, which helps to increase revenue for well holders. So we're trying to create a virtuous cycle. I know it's hard to kind of get the mechanism design right, especially in DeFi, because there are things we can and can't do according to the legal teams. Like we have more flexibility on Mamo because it's not a gov token, and so it's challenging, right? Gov tokens are more difficult just to stay on the right side of regulation. And even though I know most of you are like, well, Gensler's out, isn't everything legal now? No, not really, because the Clarity Act hasn't passed yet. And there could be a new president in a few years that is hostile to crypto again, like Senator Warren's crypto army might come back. And so we're trying to stay on the right side of the law, which is what we've done for 3.5 years, and be a compliant, compliant project, because that's where, when all the TradFi guys start bringing their billions and trillions of dollars of stablecoins, we want the Morpho USDC vault to be the safest place for them to put them. And I think it is. And that's the compelling story for Well. I think I don't want to, obviously not financial advice, and I don't feel it's like appropriate for me to predict on where price will go up or down, but especially as the founder, what I will tell you is that Scott Bessent, the Treasury Secretary of the United States, said that with the passage of the Genius Act, the stablecoin market cap, which today is about $350 billion, mostly Tether and USD Coin, will grow from $250 to $350 billion market cap to 2 to 3 trillion in the next few years. And that is our target market opportunity. That is where, when the TradFi funds come in and they want to bring the billions and eventually trillions of stablecoin liquidity, they're going to come to Base. And the reason why they're going to come to Base is because Coinbase is probably the most trusted custodian. Coinbase custodies all the Bitcoin in the major ETFs simply because they have the best cold storage solution. And so if you think about, that's why we're long, that's why we kind of have this long thesis and why we're not on mainnet, is because we think that trillions of dollars of stablecoins will come to Base. And what makes Coinbase unique, think about it this way. Base is basically like an internal ledger at JP Morgan Chase or at Bank of America. Banks have their own internal ledgers, but Coinbase is the most trusted crypto bank, and they're the most trusted custodian. So Base is the internal ledger at Coinbase. But what makes it unique is that everyone with an Ethereum wallet can read and write to Coinbase's internal ledger. And that's why we're building on Base. Because in that world, and we've been building, stablecoin infra, we're building at the center of AI finance, personal finance agents that don't take custody of user funds. And we've designed this system in such a way that it can support the smallest retail wallet, whether you're just using Coinbase wallet in the Base app with a few dollars, all the way to the biggest financial institutional players that might want to park $100 billion of stablecoins in a cold storage solution, and then have a finance agent that can automatically move it between the various vaults and earn the best rate without taking custody. And so if you kind of put it through that lens, in a world where, let's say even at $1 billion in that Morpho vault, 15% performance fee, I just put some hypothetical numbers, 15% performance fee, 10% borrowing rate for USD Coin against Bitcoin in that one Coinbase wrapped Bitcoin market. The only collateral is Bitcoin and cold storage at Coinbase, the most secure form of crypto collateral imaginable. Staked ETH and cold storage at Coinbase, ETH. And today it's only CBBTC. Now I'm at 10% borrowing rate at $1 billion. That's basically minus the performance fees. That ends up being about $12 million in revenue, I believe. The performance fee is 15% of, so, $15 million in revenue. So I think that revenue would flow back into Well because of the reserve auctions. And that's just at 1 billion. And, if we can scale that up to tens of billions or hundreds of billions, we're not thinking big enough yet, right? Because crypto just became legal and it's no longer the crypto economy. It's now just the economy. I could talk for hours about this, but
I can tell. I just wanted to clarify about because you mentioned a lot of legal stuff, why you wouldn't be able to do that. But just to clarify, is Moonwell able to hold actual Bitcoin and Ethereum on the balance sheet that you can use in case of an event,
yes,
or just
okay,
so
the foundation can.
I think that in itself, if Moonwell is stacking Bitcoin and Ethereum and just has it on the balance sheet, you can do stuff with it. I mean, you can run your own LPs with it and earn even more, or you can just say, hey, we don't just have Well as in our treasury in case something happens. We have hard assets in case we get hacked or whatever. I think that'll build confidence for people to come and use Moonwell because it's backed and backed by hard assets. So I would just be for stacking hard assets for the foundation.
No, totally get it. Yeah. Now, I do want to clarify. One of the challenges they have told us, our legal teams, is that we shouldn't deposit foundation assets directly into the Moonwell protocol. However, the Morpho protocol is a different story, so we're trying to get the legal teams comfortable with that. I do have to run though. I apologize. I think I'm late, 7 minutes late for my next meeting. But
thanks for answering the question.
Conversation. Hopefully, you understand that we put a lot of thought, and we worked with Walker's Global, which is one of the best law firms in the Cayman Island, on some of these issues. They're really hard challenges, and then there is a lot of signing friction in the sense that there's 3 directors, a secretary, and a supervisor at the foundation. I'm not even a multi-sig signer on the foundation stuff, so it does require us to kind of set up some automation for them so they can do things like create LP positions. It's not as easy as it would be if it was like your personal ledger or your personal wallet, but it is something we definitely do need to do. And we're as we hire and grow, we're going to try to help. For example, I know the if you're familiar with Dakota.xyz, it's a great company. Foundation is currently migrating some of the treasury or the runway assets over from the foundation to Dakota.xyz. Check it out. They allow you to earn T-bill rates on all your stablecoins. And it's a really awesome, kind of custodian for crypto DAOs and other projects. They will also allow us to, hold things like Superstate, which allows the foundation to have exposure to the basis rate, if you're familiar with what that is. But I have to run. I appreciate your questions. You definitely have some great ideas. And I just want to say, like, there are things that I would love to do tomorrow if I could, but there's also, a lot of regulatory friction involved in some of those things. So I just wanted to say, like, it's not an easy thing. Like, those of us
Yeah.
that are deep in the weeds, I can tell you're really deep into the economics of it. And I love that. Like, I think about that a lot, not
Well,
just on the
I'm deep
foundation
into
level,
it,
but on a
Luke, but
personal
yeah,
level, I have a lot of Bitcoin and ETH just kind of diversified in my personal portfolio, right?
right.
Yeah.
Well,
Anyway,
thanks, Luke.
thanks for your
Yep.
thoughts, man. What's your name,
Yep.
by the way, if you don't mind sharing?
David.
David. Great. Let's
Yeah.
continue this discussion in the forum about the diversification. I'll try to respond. It's really hard for me to keep up with comms lately. I think I have 250 on Reds on Telegram, but I'll try to let's add that to discussion, and we can also talk about it when the snapshot goes up next Monday, because I do think it's a good idea to hold some of the reserves back, and we could also figure out how to diversify out of those. Although I don't think Moonwell wants to sell well tokens, but we could sell. It's easier just maybe keep CBBTC instead of selling it, right? For example.
Right. Exactly.
Yeah.
All right. Thanks, Luke.
Thanks, guys. Thanks, Dave. All right.
right,
Well,
thanks.
that was a
Okay.
long-winded answer, but I appreciate the question. It was really thoughtful.
Yeah, I hope that breaks down the barrier for others to come on these calls and ask questions as well. So thanks.
Yeah,
David.
I mean,
Appreciate
I
it.
feel like people are afraid to ask, but I love answering questions like that. I probably go into TMI, like the legal team may tell me not to say so much, but I don't mind sharing that we have a lot of these discussions with really expensive lawyers, and I learned a lot from them.
Yep. We're all friendly, so come ask questions on these calls. So all right, well, I think we're gonna call it a day there. Thanks everybody for speaking and for asking questions and listening in, and we'll meet next month. All right, thanks everybody. Cheers.